total assets here, right? And for the lower part, liabilities plus owner's equity. First of all, you write down the liabilities. Start from current liability. Under current liability, accounts payable, tax payable, short-term notes payable, sales tax payable, all the payable, the accrued expenses, other liabilities, right? And then you write down long-term liabilities, long-term debt, long-term notes payable, and then owner's equity. Under owner's equity, you have common stock, paid in capital, and then retained earnings. Normally, occasionally we have, because not every company, routinely buy back its own shares as a treasury stock, and not every company, have a currency translation gains that you send money and you receive extra dollars. So, mostly the profits are kept inside the countries for business expansion. So this must be equal to total assets. We'll see the forms of there as well. Now statement of cash flows, which shows what is happening to the cash, where cash is spending, and where is basically inflow and outflow of the cash. Simple. How much cash is coming and how much cash is going out. Only cash transaction, which means non-cash transaction like depreciation is not going to be recorded here. So it reports three kind of cash flows: investing, operating, and financing. So operating means that anything can happen, any expense or anything cash inflow related to selling goods and providing services to customers. That's it. Salaries paid, rent paid, sales occurred, anything that you receive hard cash, not the barter transaction. Non-cash items are not going to be written here. Investing means that you are selling your fixed assets or long-term assets. So that is sometimes, so that is an unusual activity, not a business, normal operation, unusual activity. So sale and purchase of their long-term assets. If you purchase a plant, so your investing activity would be outflow. Outflow would be negative cash. If you are replacing the car, so proceeds from selling old car is plus, and now buying a new car is going to be negative, right? So this is going to be written here. Financing means how much loan you receive, how much new issue, any kind of financing that is you receive, either from shareholders, either from outsiders, from banks or whatsoever, by bond, stocks, this kind of stuff. All the equity transactions, dividend, repurchase of company stocks. So anything that related to funds generation, whether you are buying back your own stock, you issue more loans, or you issue more stocks, you pay dividends, is going to be recorded in financing activity. But remember, only cash items going to be recorded here. So this is how it is written. Cash flow from operating activities, so net income, because this net income include all the non-cash expense as well. So they add back all those stuff, so for reconciliation, because we less down the non-cash expense in depreciation in operating expense in net income. In order to calculate the net income, we go through net income minus expenses, and this expense include depreciation, which is non-cash. So that's why we are adding back that depreciation here. So if you don't understand this one, so don't worry about that. We have a whole chapter on this one. So just giving you a taste how we make the financial statements. Cash flow from investment activities. So you see, you purchase plant and property, you sell it, or you whatsoever changes in the net assets, everything going to be here. Long-term assets going to be written here. Financing activities, issuance of debt. So dividend, so issuance of stocks, repurchase, and dividend. Dividend going to be because it is outflow. When you issue stock, you receive money. When you issue bonds, or receive loans, you receive cash. So that's why it's a positive sign. Payments are negative sign. And that's it. So net increase or decrease is going to be here. And you added cash at the beginning, you find out 1885 at the end of the period. So this must be equal to balance sheet cash and cash equivalents. So if you pay close attention here, so this 1885 in 2012 would be exactly equal to, in balance sheet asset side, balance sheet asset side, 1885 here. See, so basically we want to verify that whether this much cash is still in our bank account or cash equivalents, we still have this cash or not, or this is a fictitious figure. We have backup support for this, and we made a whole new statement called this cash flow statement, right? So there's a link between all these stuff. First, you need to make, so remember the order. First, you need to make net income. Net income is used to calculate retained earnings. Retained earnings is used to make balance sheet. In balance sheet, there is the cash item, and in order to verify this cash, you make cash flow statement. So this first you need to make income statement, second retained earnings, third balance sheet, fourth cash flow statement. So it's not gonna happen that first you make, or you cannot disrupt the order. First you make balance sheet. For balance sheet you need retained earnings. From where you can calculate retained earnings? Then you need to go to step 2. If you want to calculate retained earnings, you must have net income numbers. So you go back to net income statement. Everybody clear? Marco, Venetia, Mirko, Havarun, 10, House,
Yes, sir.
David, Priscillo, PD, all
Yes.
Yes, sir.
Yeah.
Yes, sir.
Good. Okay, let's go back to the here. Now it's time to test your knowledge. This is the concept checker here. Illustration is there that assume the SB Technologies Incorporation is expanding into Australia. Identify the financial statement where decision makers can find the following information about SB Technology Incorporation. In some cases, more than one statement will be reported that needed data. So you tell me, anyone, please turn on your mic and start answering. So if we want to find out revenue, which statement we will see?
Income statement.
Well done. If we want to find out dividend, which statement we'll see?
Statement of retained earnings.
Yes. And statement
The
of
balance.
as well, right? So at the end of cash flow from financing, we talked about that. Anything, payment of interest, payment on the funds acquired, gonna be reported here. If you couldn't pay attention, so let me just show you here. See? So dividend figures can be picked up from two statements, retained earning and cash flow statement. So current liabilities,
Balance sheet.
well done. Total assets,
Balance sheet 2.
well done. Selling and journal and administrative expenses,
Can be income statement.
expenses, of course, only one statement that reports revenues and income and expenses, that is income statement. Ending cash balance, or cash balance, where we can find out,
Cash flow statement.
and the balance sheet as well, right? Two statements. Cash spent to acquire building.
Cash flow statement.
Cash flow statement. Well done. Because in financial statement of balance sheet, we report all the cash, cumulative, all the cash, not a single cash spent on building. But on one thing, cash spent on building will be cash flow statement. Well done, Mirko. Well done. Ending balance of retained earning, where we can find out,
Retained earnings statement.
and the balance sheet as well, because
Balance sheet.
retained earning that will go to balance sheet. Well done. Net income.
Income statement.
And
Also the cash flow.
no, yes, cash flow and retained earning as well. Well done. All three, because net income going to be used in to find out the net income statement. Net income going to be find out from income statement and statement of retained earning, and also under cash flow from operations. Right, all? Well done. How about the income tax expense? Where we can find out?
Liability? I mean, balance sheet, I guess.
Expense. Only prepaid expense gonna be find out from balance sheet. So income tax expense gonna be find out from income statement, because that is the only statement which shows revenue minus expenses. Common stock, where we can find out. Not the issuance of common stock, total common stock. Balance sheet, right? If it's written issuance of common stock, that means a part of the common stock is issued, new issues, so that will be in cash flow statement. Oh, sorry. Income tax payable. Payable mean liability in balance sheet. Long-term debt.
Balance sheet.
Venetia, I'm not hearing your voice. Well done. The last one, adjustments to reconcile net income to net cash provided by the operations. Which one?
Cash flow?
Well done. Cash flow statement. So that's all. Now, this one I already explained you, because if you want to find out the relationship among the financial statements, so first you need to make income statement, because income statement then it used to calculate the retained earning statement, right? And these are the formulas: opening retained earning plus net income minus dividend is equal to ending retained earnings. So this is just, the extra things. First, you need to calculate the net income, and then retained earning, and then balance sheet, and then you can find out the cash flow statement. So what is the link between that? You make income statement. Income is used in retained earning. So this figure will go here. And then you will make the balance sheet. So that retained earning figure will go in the balance sheet here. From balance sheet, and then you make the cash. So in cash, under the balance sheet, that's going to be verified through cash flow statement. So this is the link between these, these four statements.